All right, let's be honest. If you're renting right now, you're helping someone build wealth. It's just not you. Every month when you pay rent, that money goes straight into your landlord's pocket, helping them pay their mortgage, build their equity, and grow their own net worth. In this video, I'm going to show you why that happens, what it really costs you, and how you can flip the script so next year you're the one building wealth through homeownership. And stick around until the end because I'll show you exactly how to figure out what it would take to buy instead of rent, even if you think you're not ready yet. Let's start with a simple truth. Renting isn't bad, it's part of life. Most of us have done it, and for some people, renting makes sense for a while. But here's the problem. Your rent payment doesn't build anything for you. When you send that rent check every month, that money is gone forever. You don't get equity, you don't get tax benefits, and you don't get closer to owning anything. Instead, your rent helps your landlord build their wealth. Let's break it down. When you rent, you're paying for everything your landlord needs to keep the house. Their mortgage payment, that's usually the biggest chunk. Their property taxes, which in California can be thousands of dollars every year. Their homeowner's insurance, their maintenance and repairs, things like water heater, roofs, and landscaping. And yes, most landlords charge more than their costs so they can make a profit every single month. So let's put some numbers to it. Let's say you're renting a house or an apartment for $3,200 a month, which honestly is pretty average for a lot of parts of California right now. That $3,200 probably covers about $2,500 for the landlord's mortgage, around $400 for property taxes, and another $100 for homeowner's insurance, and maybe another $200 for maintenance and management fees. So what does that mean? It means you're paying all of the landlord's expenses and then some. They are not losing money. They're using your rent check to pay off their mortgage every month, which lowers their loan balance and builds their equity. And that's not all. Over time, as home values rise, and they almost always do in California, your landlord's property is increasing in value while they owe less on it. So every month that you rent, two things are happening for your landlord. Their loan balance is going down, you're helping pay it off, their home value is going up, and they're the ones keeping that gain. You are paying down their investment while they sit back and build wealth, all using your monthly payment. And here's the part that really stings. 5 years from now, if you kept renting, your landlord could sell that same home and walk away with hundreds of thousands of dollars in equity, and you'd have nothing to show for it except rent receipts. That's why I always tell people renting isn't bad, but it's temporary. It's a stepping stone. At some point, you've got to take that same money and make it work for you instead of someone else. If you're ready to stop renting and start owning, give us a call at 209-640-1710. We'll look at your numbers, your goals, and build a plan that helps you buy your first home in California. Okay, now let's flip that script a bit. So let's say instead of renting for $3,200 a month, you decide to buy a house for $600,000 with 5% down. That's $30,000 up front. That means your loan amount would be $570,000. Now at today's interest rate, around 6.5 to 6.75 on a 30-year fixed mortgage, here's what the real monthly payment could look like. Your principal and interest payment would be around $3,700 per month. Property taxes are calculated at 1.25%, which is about $625 a month. Homeowner's insurance is going to probably be around $120, maybe a little bit more. And because you didn't put 20% down, you're going to have private money insurance, or PMI, which is going to be around $270 per month. That brings your total estimated monthly payment to around $4,700 per month, give or take a little depending on the home and your credit score. Now, yes, that's higher than your rent, maybe about $1,500 more than what you're paying now, but here's the key difference. That payment is building something for you. Every single month, part of that payment is paying down your loan balance, meaning you're building equity, and over time, as your home value increases, you build even more wealth. So while your landlord is cashing in on rent increases every year, you're locked into a payment that doesn't change. Rent usually goes up every 12 months. Your mortgage payment? It stays the same for 30 years. So yes, buying might feel like a stretch at first, but that's how families build financial stability and long-term wealth. It's not about paying less today, it's about paying smart for your future. So now you're probably thinking, okay, I get it, buying builds wealth, but how do I know if I'm actually ready to buy a home? Let's break it down. First, look at your income. Are you earning enough to comfortably cover your monthly payment, around $4,700 in our example, plus the normal things like groceries, gas, family expenses? If you've got a steady income and you're not living paycheck to paycheck, that's a great start. Second, think about your savings. You don't have to have a huge nest egg, but you should have enough for a down payment, closing costs, and a little emergency cushion. Maybe 3 months of expenses. That way, if your car breaks down or the water heater quits, you're not in a panic. Third, check your credit. You don't need perfect credit to buy a home. A lot of buyers I help have old credit cards or student loans. That's normal, but keeping your credit score above 680 can make a big difference in your interest rate and your monthly payment. And finally, ask yourself one more question. Am I planning to stay in one place for at least 5 years? Because if you are, that's when owning really starts to pay off. 5 years of rent is money gone forever. 5 years of mortgage payments builds equity and comes back to you when you sell or refinance. So if you have a steady income, some savings, and you're tired of watching your rent go up every year, now I get it, buying a home can feel scary. You might be thinking, what if I don't have enough for a down payment? What if my credit isn't perfect? What if rates go down later? Here's what I tell my clients. You don't need to have it all figured out before you start. There are programs that help you with down payment, and there are ways to buy smart even when rates are a little bit higher. I have helped families buy homes with as little as 3% down and even with less than perfect credit, because the key is having the right plan, not the perfect situation. A lot of renters think, I'll just wait another year. But here's what usually happens. Rent goes up, home prices go up, and the same house you could have bought today ends up costing you a few $100s more per month later on. Meanwhile, you've spent another $40,000 to $50,000 in rent that didn't go towards anything for you. So waiting can usually be more expensive than buying. If you're going to spend money to live somewhere, it might as well be on a home that belongs to you. Want to know if you're actually ready to buy? Here's a quick checklist. You have a steady income. You've been renting for at least a couple years. You saved some money for a down payment or closing cost. You're tired of paying someone else's mortgage. If that sounds like you, it's probably time to at least explore your options. So here's the takeaways. Every month you pay rent, you're helping someone else build wealth. But with the right plan, you can start building your own. You don't need 20% down. You don't need perfect credit. You just need the right strategy and the right team. So if you're ready to stop renting and start owning, give us a call or shoot us a text at 209-640-1710. We'll look at your numbers, your goals, and build a plan that helps you buy your first home here in California. And if this video helped, hit that like button, subscribe to the channel, and drop a comment below telling me how long you've been renting. I'd love to hear your story. Thanks so much for watching, and I'll see you in the next video.